What's interesting to me is that if you look at the price indications at about $56 per share, that implies a valuation about $60 billion. Does ARM have a growth rate that justifies that type of a price tag?
Well, not in the near term, but definitely in the long term. The valuation implies that investors are underwriting the long-term growth that it is expected to achieve from the fast-growing markets of data center, AI, and automotive, where the company is just getting started.
You are looking at a company at $60 billion on its first day in public markets after its ownership of, after its SoftBank ownership, and that implies a 22.4 times multiple to its trailing sales. What does that mean to you?
I mean, this is definitely in the premium, and along with the semi-design IP peers and sort of the AI companies like NVIDIA. And like I was saying, it seems the investors are underwriting the future growth coming from these markets rather than the current revenue composition, which is heavily based on smartphone and consumer electronics.
It's also a good day. Let's talk about that. It's a good day in the markets, Kunjan, and so they're getting a little lucky here. They have relative calm. There was no crazy CPI print yesterday. Retail sales kept the market relatively calm. The VIX is low, but there are a lot of risks on the horizon. If you're a new investor looking to ARM, what are those risks that you should really be aware of impacting this valuation that we see today?
Yeah, so in the near term, like I said, because the revenue composition is heavily relied on the smartphone, and we know that smartphone market is going through a slump right now. So as they come out for the near-term quarters, investors will have to be patient and face for some hurdles coming in the near term, because those data center revenues will take time to become a significant portion of the total revenue. And the second key risk is China. From China, it's about two angles. One is the exposure and the concentration. I mean, they have 24% revenues coming from China, which is not a lot or not an outlier for any large semi company. I mean, all of those have exposure in that range or even higher for a smartphone company. But the other key risk is concentration. So ARM China is their gateway to the entire China market. So every customer they sell, what they want to sell in China, they have to go through this one entity. So if something were to really go south there, we're talking about cutting off the entire market. So that's the two risks investor needs to brace themselves for.
All or nothing feels a little risky. But at the same time here, when you think about the long term, you've said that a couple times now, how long is the long term? When do investors have to be patient until?
I think at least about 3 years. I mean, today when we look at the server market specifically, their market share is in mid-single digits. And in automotive, it's, again, low double digits. We expect it to almost double in 3 to 5 years. And these markets are large. So even if you get a small pie of, like, say, a data center AI market, that's still adding revenue in north of billions of dollars to a company which is almost doing close to less than $3 billion last year.
When you think about the competitive landscape, at this point you have ARM now in public markets. SoftBank at some point will look to sell more shares. How do you expect them to stack up against their competitive set when it comes to how investors will put money to work in the sector?
Yeah, I mean, I think they need to continue executing on the promise that they would have delivered for that ramp in the roadshow presentation. So investors are going to be keeping key eye on how they're doing in the data center and the automotive market. So any accelerated growth, design wins there should be a tailwind for them, or a headwind in absence of that.